be active, here are the rules. I'm going to start on the bottom. Letter B, you can't be a limited partner. Okay. Now, you can invest in... No, watch, here's what it is. You can invest in real estate with other people. These are partnerships. If you invest with other people and you still have control over the property where you deal with management, answer issues, you are considered a general partner. And you can still bring these paper losses through the wall. However, if you ever invest in real estate and you are what's called a limited partner, meaning all you did was invest your money and then you get a report of how the property does and you have no control over how the property's been rented or anything like that, then you are considered passive automatically. And by the way, the people that were considered passive in the old days were people that were professionals in other arenas that didn't have time to deal with real estate. For example, I might be a doctor. I make a lot of money as a doctor. I don't have time to deal with the buildings that we've invested in. So somebody else does all that, and I just get a report on how the buildings are doing. I'm considered a person who is a limited partner. And how do you know if you're a limited partner? It's really simple. When you go into a partnership, the partners will tell you whether you're a general partner or a limited partner. If they say you're a limited partner, guess what? You can't bring losses through the wall. So what am I telling you you should not do? Do not be a limited partner if your goal is to bring the losses through the wall. Okay? Now, going back to the next part. In order to be active, you have to participate in management and you can't be rich. What did rich mean? Over 100. If you go over 100, some things change, and I'll come back to that. But you have to participate in management, which simply means this. To participate in management, it means you have to make management decisions pertaining to the property. So now here's the question. If you own a little rental house, what is a management decision? Who to rent it to? Would that be a management decision? How about how much rent to charge? How about I need to go over there and plunge a toilet? How about I'm going to hire people who love to plunge toilets so I don't have to do it? How about I hate all tenants and toilets so I'm going to hire companies to do everything so I have nothing to do? How about I'm going to hire an entire management company who does everything and I sit home and do nothing? Yes, as long as I manage the management company. In other words, I now want to teach you this. You don't have to physically do anything on this property. If I hire a management company to deal with all the tenants and toilet headaches, I still can be active as long as I manage the management company. How do you do that? Real simple. You hire them, and then so often throughout the year, you call up the management company and use these exact words. How are things going? And whatever they say, you write it down. Am I managing the management company? And by the way, if they say there's a problem, I'm going to tell them to fix it. If they can't fix the problem, I'm going to fire them. You see what's going on here? Am I still managing the property through a management company? You're still active. And the benefit of being active is they drill you a hole. Did you get that? Now, watch the next part, though. Unlike in the old days, before 87, Urs does not have dynamite anymore and cannot blow the wall open. He's got one drill with one drill bit, which will allow a maximum per year of all of your paper losses to come through the wall. The maximum per year of all paper losses that come through the wall currently is $25,000. So $25,000 is all that can come through the wall today. That means $75,000 in this example would still be taxed. Oh, and by the way, since only 25 can come through the wall, in this example that leaves 25,000 that could not come through the wall. What do I do with that? Stick it in your pocket or suspend the loss and use it later on for an unlimited number of years. Okay, so if you look at the next thing in your notes, this is point number 4. It says, active management investors may claim losses up to how much? 25,000. That's what goes in the blank. And then there's a note below that says this. Losses over 25,000 may be carried forward to future years, and there's no time limitation.
Following year, you don't have any other losses, you take that 25,000?
Yes, that's correct.
That $100,000 income that comes from other sources, or that income is the total income you have, including your rental properties and your jobs and whatever.
Total income.
Total income.
Yep. Yep. The income here is your total income. Now, just so you understand this, when you walk out here today, here's what I want you to learn. If you have clients or yourself that invest in real estate and they make $100,000 or less and are willing to manage their property, they can bring these paper fake losses through the wall up to how much? 25,000. That's the rule. Now that's if they make 100,000 or less. But now I got to show you something that's not in your notes that relates to that income. As you get richer, what does richer mean? Over 100. As your income starts going above $100,000, for every $2 your income goes up, the drill bit that Earth uses to drill the hole gets $1 smaller. What that means is if you reach the level of $150,000 of income, Earth says, you're too rich, the wall's spent and shut,